Hey, it's Lon Welsh at Your Castle Real Estate. I'm actually not a lender, though I play one on TV, so I want to talk a little bit about mortgages today. So the first thing is that the mortgage rates have been going up a little bit. Not tremendously, but you can see in this chart from the Wall Street Journal that the prevailing 30-year mortgage rate is now 3.3%. It's up a little bit from 2.8%, about a half a point from where we were back in July. And back in January, of course, we were back at like 2.7 or so. So that's an issue for us because the home prices have been going up in the double digits for a while, and incomes have been going up at a lower pace. So as there's more of a gap between appreciation of homes and how much we have for wages, it makes it more difficult for people to afford a home. We've been able to close that gap with ultra cheap mortgage rates, but as the rates go up, the payments go up, the affordability becomes more of a challenge. So eventually that'll snuff out some of the demand, particularly on the lower end of the market. So what will happen to mortgage rates next year? Well, what the Federal Reserve is saying is that they're going to probably slow down or probably discontinue purchasing mortgage-backed securities. So when you get a mortgage, what will happen is some guy on Wall Street will take about 100 mortgages exactly like yours, bundle them into a bond, slice them into pieces, and sell them as mortgage-backed securities on Wall Street. And then when the money comes in, then your lender has like a fresh pot of money to go make 100 more loans. Usually it's just individual investors that buy those mortgage-backed securities, but the Federal Reserve, in an effort to keep mortgage rates really low to stimulate the economy, has been buying them as well. And the more people you have buying the bonds, the lower the mortgage rate has to be to attract enough buyers to get them all sold. As the Fed starts to withdraw from the market, the mortgage rates will go up. That's just been proven every time that we've seen this happen in the past. We're not exactly sure when the Fed's going to do that, but it's going to be one more piece of evidence pushing towards higher mortgage rates next year, in addition to the fact that, of course, inflation is higher than normal as well. So if you're thinking about buying, I would try to do a little sooner versus later while the rates are really attractive.